Good morning. You're watching The Market right here on ET Now with me, Ayesha, Faridi, Sharma in the studios today and Avanne Dubash as well. Well, just looking at the market construct, while for our markets as well, it's getting a little edgy, lots of earnings that the markets as well are reacting to, and the kind of topple that you had from the top of the day yesterday, that was a little bit of a concern. Perhaps we only preempted what the global cues handover was because Jerome Powell's commentary surely sparked a sell-off, and it clearly seems that global cues have now turned amber instead of that all-through green that you had for the month of January. In fact, the dollar as well has now surged to an 11-week high. The yield as well has seen a jump up for a second consecutive day. So just to mark what the global cues are looking like and how bleak the performance is, while Asia as well seems to be mirroring up pretty much the same sentiment, but US stocks, almost a 300-point knockoff is what you've seen on the Dow overnight. The S&P as well fell a little bit soft, and that was the case with the Nasdaq as well. The deeper damage, of course, was for the broader indexes. So look at Russell 2000. That knocked off about almost 1.5%. Although VIX has seen a bit of a cool off, but Asia as well is pretty much across the board down about 0.5% to about 1% a piece or so. And I guess the market now going forward, Ajay, is also going to sort of lack triggers, right? You're at the fag end of the earnings already. It's pretty much in the price what the MPC is going to do later this week.
In fact, more than what MPC will do, Street would watch out for what is the commentary on growth. On growth in particular, inflation appears to be under check. In fact, yesterday Mr. Modi also spoke about inflation, which will play out in moments from now. So that monster appears to be under check. But global, the way readings have shot up, dollar index, yields, all of that will make Indian markets also nervous. And that exactly in the last hour of trade yesterday, looking at how the US futures had turned into the red, the market had started slipping. In fact, yesterday, if you pull up the way, in fact, our own VIX also shot up 7%, looking at US VIX and US futures. And that also, don't forget, in last hour of trade yesterday, the mid-cap started turning very nervous. All these railway defense stocks had tipped off. Advanced decline had gone kind of weakish in the knees already. And as you said about on earnings, the second half, the notorious second half of the earnings season will start now, where the skeletons actually start coming out of the closet. So you have to be careful.
That's not the case, and I hope they play up to the market expectations. But yeah,
but second half is when the weak set on the earnings actually come out. So suddenly the global and local construct has turned amber, and one has to be careful in this market right now.
In fact, let's before we move forward, hear out what the Prime Minister had to say about growth. And he said in his address in the Lok Sabha going on as part of the budget session, highlighting that the opposition's waning spirit. He also criticized dynastic politics and also stressed on the current administration's accomplishments, asserting that India would become the third largest economy in their third term, attributing the success to poverty alleviation, farmer support, and of course the big one, controlling inflation.
आदरणीय अध्यक्ष महोदय, मैं देख रहा हूं कि आप में से बहुत लोग चुनाव लड़ने का हौसला भी खो चुके हैं। और मैंने सुना है बहुत लोग पिछली बार भी सीट बदली, इस बार भी कुछ सीट बदलने की फिराक में हैं। हमारी सरकार ने महंगाई को लगातार नियंत्रण में रखा है। दो युद्ध के बावजूद और 100 साल में आए सबसे बड़े संकट के बावजूद महंगाई नियंत्रण में है और हम कर पाए हैं।
All right, we'll keep inflation under check despite the pandemic and despite wars. That's the Prime Minister Narendra Modi. But taking stock of the markets, and Ayesha, you were talking about the nervousness in the global markets within the broader markets, and that's as well what we witnessed back home. Yes, for the frontline indices, you did have a lot of the top heavyweights that were dragged. So, for instance, Reliance Industries or a Bharti Airtel or even a Bajaj Finance that came under pressure. And from those intraday highs, the Nifty shaved off nearly 200 points to wrap up the day at 21,771. The Nifty Bank continued to remain in consolidation mode, and I think that's pretty much been the story for the whole of January. A lot of those PSUs, Ajay, at life highs, but the Nifty mid-cap, small-cap index all away about a 1% from life highs.
In fact, I was speaking with one very prominent large mid-cap fund manager. They run one of the biggest mid-cap funds, and he was so perplexed, and he was saying, and I go to office every day thinking that I should actually book profits in 20% of my fund, but no one would allow me. So that is the kind of sentiment on the street, that mid-caps are actually almost on that edge on the valuation front. No, I'm not even going in the direction of railways and defense, but they are so sensitive that the first hint of profit taking or change in sentiment or direction in the market, look at how railway stocks are Nifty, the PSE index. So the power stocks in the PSU side, all of them tipped off. So if you're playing that game, you should be well aware that some of these names are priced to perfection. And you should not crib later on that I got stuck on the wrong footing. But there are parts of the market which are doing well on valuation and earnings front, and we would be going towards that. But just touch upon that angle once again, that 8th is when RBI policy meet would actually end, and MPC meet, and they will tell you exactly where we are heading towards the growth front. Inflation appears to be in check, because growth will actually determine how earnings growth actually will pan out. Because Ayesha, I was looking at data, almost 40% of the earnings which have come so far have shown improvement in profitability and margins, but top line growth have been below power. So growth on the top line front is an issue for a large part of the earnings which have come so far.
Yeah, and going to be looking out. While of course it's given that the pause from the central bank is going to continue, but is the stance going to soften or not? Are they going to be in line and align themselves with what the Fed has done? I think that's going to be key that the market is going to be looking out for. And like Ajay said, the commentary and growth is going to be very, very important, especially the rural end of the economy, what the RBI has to say about that, if at all they gave any bifurcated, commentary, so to speak. Domestic demand is softening a bit, so let's see how they address that particular piece. But let's move on, and let's now talk about the big news this morning. Reports suggesting that HDFC Bank may actually receive the approval to increase stake in Indices Bank. In case I can go across to Nikunj as well as Ankur. Okay, Ankur first, to get in a sense of what exactly is on the table and what are the reports indicating. Ankur?
Yes, as per sources, we have been told that Reserve Bank of India's nod is to acquire a stake in Indices Bank is not for HDFC Bank, but it is for Group. The word bank in the disclosure should be read as HDFC Bank Group. And also remember, after the alignment which has happened in the group, they need to take approval from Reserve Bank of India, if at all, in any of the banks. HDFC Bank Group has to increase stake more than 5% as per Reserve, up to 10%, and therefore HDFC Bank Group had applied to Reserve Bank of India for the same, and now that approval has been granted by Reserve Bank of India up to 9.5% stake. Now this stake may be acquired by AMC and life insurance arms, but for sure it is not by the bank. Also, sources have informed us that the group will make similar kind of application for other lenders too. So it is for the group level and not for the bank.
So actually, this was a bit of a confusion this morning, whether HDFC Bank wants to acquire additional stake in Indices Bank or group. And that is what Ankur is actually clarifying, that it's not the bank, it is group. And there are 3 more entities in the group: HDFC AMC, Pension Fund, as well as HDFC Life, which may be keen on raising stake in Indices Bank, and hence the confusion. But we'll move forward, and we'll also try and get you Nikunj later in the show to talk more about this. But right now, the focus is back on global, because there are a lot of global comments and readings which have turned amber, which you need to be careful about. Vinny is here with some of the big commentary coming in overnight. Vinny?
Good morning, and absolutely, we are seeing some commentary coming in, and obviously, inflation is the key focus, right? Everyone's keeping an eye out on. So, in terms of the commentary that is coming in from the Federal Reserve Chicago President Goolsbee, he's highlighting that inflation is now moving towards a 2% target. At one point of time, it did go below the 2% target of Fed as well. So, yes, on that front, he says that if inflation and such data points come in, which are favorable in terms of the target that they have of 2%, then yes, there's a potential rate cut that is possible as well, and he believes that one should it should be on the path of normalization now as well. So that's the word coming in from Fed's Goolsbee. Other than that, we have the next commentary that is coming in from BOE's chief economist Upil, who is highlighting as well that in terms of the interest rate cuts, that's a possibility, and that would be a reward if you see a drop coming in terms of the interest rate and inflation moving towards their target as well. So yes, keeping an eye out on that one as well. Peter Schiff, he's coming out with some commentary, and he's highlighting in terms of that the market seems to be pricing in the reality in terms of the interest rate cuts, and may come actually later on and be less substantial than expected. But he expects that the markets are still not pricing in that inflation also could be a possibility that could be stronger, and the economy could be weaker than expected as well. That's one thing that one should factor in and watch out for as well. And so he continues to be bullish on the gold prices. Other than that, lastly, we have commentary that is coming in from Neil Kashkari, I beg your pardon, Neil Kashkari, who is the Fed Reserve's president of Monopolies, and he's highlighting that inflation is moving towards the Fed's 2% target as well. And obviously, in terms of the improvement that is coming in terms of the supply of labor as well as goods and services are key factors that they're keeping an eye out on, and a possibility of a rate cut as well.
All right. Clearly, it seems to be centered around the US Fed commentary as well as interest rates and inflation. Thanks very much, Vinny, for some.
Morning. So I think we should be a lot more habitual towards these kind of intraday corrections for the indices, because many of the major sectors are underperforming or not participating in full gusto, and I think that could be one of the major reasons why every now and then the index would probably get a lot of impediment on the way upside. However, I think we've managed to break past about that 21,700 mark. And I believe that could be a crucial support for the Nifty. So I think over the near term, in case if there are intraday dips towards the 21,700 levels, we could probably try and just pivot or take a pivot support at those points. There is no major change in terms of the open interest flow for the indices, both the Nifty and Bank Nifty. Mild bit of unwinding which is going on into the indices, but that is just to the tune of 1.5–2% odd for the for the benchmark indices as well as for Bank Nifty. So that generally is not a major cue or an indication that any kind of a major trend is in the making. So we would expect that this broad range of consolidation could happen with intraday bouts of volatility.
Right. Niresh, hi, morning. What are you sensing about the mid caps in particular, and especially that last hour tumble that we saw?
So we've had a strong rally across the mid cap and the small cap space. So if you look at the small cap indices, we are up 3 to 5% above the previous all-time highs. We've not been able to cross those all-time highs on the Nifty 50 convincingly, neither convincingly on the Nifty 500. So there has been a lot of outperformance, and in that particular basket, we've seen a much larger outperformance in the PSC, railways, etc. And a lot of these spaces which have gone up much more than even the constituents of the small cap and mid cap indices. So any profit booking there suddenly makes the index look much more worse than it is. So overall, we are in this scenario where we need to find some consolidation range for the Nifty as well as for the small cap index. So going forward, I would expect moves in the mid caps and small caps to be more selective. One has to be a little more careful in the overbought spaces like railways, PSEs, etc. There could be, say, a 15% correction from the top in a lot of these names.
Avanne, one data point which we missed discussing yesterday, what happened is the FI long positions from 58% has come down to what, under 40. So that is a big kind of a...
I think at 22,200 which we made last week, it was almost 22%, the FI long numbers.
Without FI long positions, we went to 20.
It is as low.
So you're saying that FI activity in the FNO side is
very minimal.
Not doing well, make a trend across the board. And Dr. Reddy's is the one which is left. And it has been knocking at that 6,000, 6,100 resistance for the last few days and sustaining well above those levels. So it would be a breakout on the shorter term charts of last 4-5 months as well as the longer term trend lines above these levels. So expecting a move towards 6,600 in the short term and much more higher in the medium term. Stop loss at 5,900. Second is a buy on Tata Steel. The stock made a new 52-week high yesterday. Range breakout also here. very similar to rest of the metal pack. Tata Steel has been a relative underperformer. So expecting this to see a short-term move towards 155, stop loss at 137.
Okay, there you have it. That's what Naresh is picking out for the day. Meantime, Kunal, let's get in your trading strategies as well. 2 buys.
Yeah, 2 buy calls. The first one is one Bharat Forge. The stock looking attractive, in fact, bouncing off from its 50-day moving average as well as a swing breakout. 1320 as a target for Bharat Forge, and stop loss could be kept at 1240. And Geo Financial is something which has spiked up quite well yesterday. Exceptional volumes for the stock and confirming a swing breakout about 280 levels. So would suggest a buy with a target of 306, stop loss at 282.
Okay, in the meantime, let's move on and let's talk about all the stocks which are going to be in focus. Of course, OMCs have been on fire, continue to be so, and Bharti is going to be reacting to its numbers even though the stock went in weak into its earnings. So, Amit, tell us what's the verdict?
Well, there's nothing for the stock. There was actually nothing for the stock to decline yesterday in trade. It was a slight miss on the consolidated front, but that was largely on the back of a weak number coming in from the African operations. But Indian operations, India mobile operations, which is the key driver for the stock, has reported a strong set of numbers. India mobile revenues were up around 3%. Indian mobile EBITDA was up around 3.7%. Subscriber base increased to 34.56 and ARPU came in at around 2.5% higher on a sequential basis at close to 208 rupees. Now, if you see the Indian mobile operations, now they reported strong set of numbers owing to higher subscriber base and higher ARPU. ARPU has been increasing for the company without any tariff hike for the third consecutive quarter, and this is purely on the back of more 4G subscribers coming into the network and because of the increasing postpaid penetration of Bharti Airtel in the Indian mobile segment. ARPU grew to around 208, which is also above their medium-term target of around 200 rupees. Now, when it comes to subscriber base, it has grew for the 8th consecutive quarter. 4G subscribers have been continuously adding, and more 4G subscribers was one of the major reasons behind the subscriber addition for Bharti Airtel in Q3. Also, the other businesses like the broadband, DTH and the enterprise businesses reported pretty much in-line set of numbers. Another key positive factor coming in for Bharti Airtel in the Q3 numbers was the net debt. Now, that has declined by around 5,100 crore rupees on a...
That's the thing, the stock is already at 4 digits. How is that?
The thing is, they haven't come up, they haven't upgraded their target price because the call is today at 2:30. So it post that.
Actually, going into the results in the last two series, if you see, this is one of the quiet movers. And one of the big reasons being cited is that the tariff hike buzz is back. By mid of this year, in the second quarter, the likelihood of a tariff hike.
After the
that
election.
is actually in the run-up to the
reason even Reliance picked up. Part of the reason.
part of the reason.
Yeah.
And there is no tariff hike been for almost years now.
2021 was the last one, and
years.
most likely post-election what the speed is
Exactly.
expected.
For 2 years, no tariff hike, and now whenever it happens, it will be beneficial for both.
Yeah, that'll be a big trigger. But that aside, checking on some of those OMCs, really fired up. But it seems like, Somit, valuations are likely catching up.
Well, yes, it actually seems at least like that in case of Indian Oil Corporation, at least that's what we are seeing. Now, off late, if you see, oil marketing companies have been running up late on the PSU pack. Now, fundamentally, nothing has changed for them. The gross refining margins are largely stable around the $8.5 to $9 per barrel mark. The marketing margin that they're earning on petrol and diesel is also stable. On petrol, it's around 8.8 to 9 rupees, while on diesel, it's around 3 to 4 rupees. So, nothing has changed on that front. So, what could have led to this rally? Possible valuation catch-up, because if you see at the start of 2024, the valuations were either below or at par with its historical average, and that we are talking about the 5-year averages of PE that we are seeing. Now, if you see at the valuation table for Indian Oil Corporation at the start of 2024, the valuations were at around 6.3 times, which was at par with its 5-year average. Current valuations have shot up to 8.5, which is very near to its peak 12-month forward PE of around 9 times. For BPCL, the valuations are still below its 5-year average at around 8.6 is the 12-month forward valuation, while the 5-year average is 9 times. So that is one stock that could still see some run up given the fact that valuations are still cheap. And when it comes to HPCL again, the current 12-month forward valuations are much ahead of its 5-year averages. Also, the margin of safety that we look for oil marketing companies, that is how much they are away from their 200, 100 and 350 DMA. Indian Oil Corporation's share prices are 75% away from its 200 DMA, 59% above its 100 DMA and 36% above its 50 DMA, while the RSI is 83, which is way ahead of the overbought zone, which is at around 70 times. While the analyst consensus view, in fact, the consensus target price is also now way below the current market prices of all these oil marketing companies, which suggests a potential downside for Indian Oil Corporation is around 19%. For BPCL and HPCL, it's anywhere between 7 to 14%. So keep an eye out for OMCs.
So I have another question for you. since we are talking of energy stocks, do you know which energy stock is on Prime Minister Modi's radar right now?
I guess it should be ONGC.
Exactly, ONGC, because he tweeted about it. I don't remember the last time Mr. Modi actually tweeted about a particular company, that too on the listed side. And since then, the stock is on the upside almost 10-15%. Last time he spoke about PSUs in particular, and there was a massive rally in PSUs. But coming to ONGC, Indian energy companies, ONGC and others, will be in focus this week. Moreover, because PM Modi is set to inaugurate the India Energy Week in Goa. My colleague is joining us, Prakash from New Delhi. Tell us what this mega event is all about and why you should be.
The Prime Minister is going to inaugurate India Energy Week today at around 10:30 a.m. PM will inaugurate ONGC's Sea Survival Center, and at around 11 a.m. the Goa edition of India Energy Week will be inaugurated by the Prime Minister. He'll also hold roundtable discussion with the global oil and gas CEOs along with various global energy experts. This mega event is being attended by global companies like Rosneft and Saudi Aramco, among others. This 4-day mega event likely to see participation of 17 energy ministers of Iraq, Nigeria, Guyana, Sri Lanka are expected to be present, among others. Discussions surrounding to various areas like energy transitions, the development of future-ready options, energy options, development of alternate fuels, likely to take place amid quest for energy security for big consuming country like India at affordable prices. Along with that, this year's in India Energy Week being held at a time we are seeing some disruption in Red Sea. Also, the two ongoing war between Russia and Ukraine and Israel and Hamas far from over. So this mega event is going to provide an opportunity to the consuming countries and producers to find an amicable solution to the challenges they are facing.
All right, we'll be watching out for that and all of the commentary that comes in. Thanks very much, Prakash, for filling us in. Quick break. Be right back with lots more.
So let's take the discussion forward with Sanjeev Bhasin joining us this morning to talk markets and his stock picks. Sanjeev, morning. It appears that overnight, things have turned amber there in the US. In last hour trade yesterday as well, here in India, advanced decline had worsened and mid caps did take it on the chin. Are you also of the view that perhaps time is ripe to take some chips off the table? Sanjeev?
Yeah, good morning, Ajay. That is the clear view which is there on the market. Now, markets will always be in aberrations, both on the up and downside. And who's to question that? Ajay, I think the type of run we've seen in PSUs is more out of under ownership and outperformance on the results. Can it continue? It surely will, but there will be a process where you will weed out the men from the boys. I think there is extreme overbought conditions in a lot of the PSU basket, and that could be could see a smart correction. Now, to comment on the US yields and dollar, this is a constant foray. The Fed will not let you sleep either side. 3 rate cuts were not there on the card 3 months back. Now there are 3 rate cuts. Yields are softening. So there will still be humbug, whether it's March or April. Markets have moved beyond. Markets are looking at growth. The US numbers as far as a soft landing are very, very strong. And I think earnings is what is going to be the catalyst. In the Indian context, you are aware that for the foreigners, there is a huge feeling of missed out. They will buy PSUs or the select, large caps. But I still think there is going to be more movement into large caps as a safety net. Mid caps can see profit booking, but that's routine. And market could be in a range for some time till we get more color on earnings.
Approach clearly appears to be slightly on the defensive side by the sheer nature of the market we are in, and hence tilt towards large caps. Since you spoke about earnings, Sanjeev, are there any earnings which caught your attention?
Well, Ashok Leland, I've been advocating. I think if you are re-rating Tata Motor, Ashok Leland is now catching up on the CV side as a market share. Its bus market is roaring with Indigo. The other part, its EV market is doing extremely well. And I think Ashok Leland deserves to be re-rated. So I think numbers are very, very smart. I also like the numbers from Bharti Airtel. I mean, 208 or 208 rupees as an ARPU was a far cry 1 year back. Of course, the stock has run up. Secondly, Ajay, even though there was disappointment on some of the agrochems for specialty players like SRF, I mean Tata Chemical and UPL, I think they are now in an accumulation zone. So if you are looking for some ideas, there are enough in the specialty chemical, given that China's stimulus impetus is going to come back. And we think this destocking for UPL and Tata Chemical, SRF, that whole basket may be done with. And we could see much more traction coming faster than we thought. So these are contrarian plays where you can be, the price is on your side, but the underlying fundamentals will take, a few weeks or maybe a month or so for them to stabilize.
Morning, Sanjeev. Wanted to get in your take as well as to what the outlook is when it comes to Britannia in terms of the kind of quarterly numbers, just going by what we've seen within the entire FMCG space, the fact that they have acknowledged a rural slowdown. What is your anticipation?
Correct. So I think that is part and parcel, but Britannia is up for different reasons. I think there is some corporate event because the stock has been on a tear. I expect Nestle to come out with very strong numbers. That's due tomorrow. I think Britannia could be, all the numbers are in the price. There could be little EBITDA pressure of 1% or so because of the rural side, but it's a superb brand to buy. And Avanne, I think Nestle and Britannia have been relative outperformers. Now, in the context of where they are more of, a play as a necessity now. And I think that there will be some corporate news which is there on Britannia. Otherwise, the way the stock has been on one of the best performers, it has to be accompanied by other news. We know that the Wadia Group is looking to divest, and there could be some smart play over there. On the other hand, I would say I continue to think Nestle to be a pedigree name in your portfolio at a time when defensives are going to be a little bit on the positive side. You should be hiding in some of the FMCG names.
Okay, fair enough. That's the view coming in. But also wanted to get in your take in terms of what's happening with Paytm. We understand now that there are some startup founders, a cluster of them, that have written to the finance minister and the RBI governor seeking a review of the RBI action. What is it that you make of the developments that we're seeing in Paytm?
Well, I am also a silent spectator like most others and waiting for more news or clarity. It's a drastic measure. And now, as a corollary to that, Geo Finance, which we also own, is up 16% in 2 days. Bajaj Finance, which we have been negative on, is fallen like a rock. It's been underperforming. So it tells us that there could be something more which is, fishing. Just to also tell you, Avanne, every day 77 lakh shares are being taken away by smart investors or people who are in the know. So I cannot comment till the RBI gives more clarification, because it's not just Paytm's KYC and other norms. It will be the whole ecosystem. And we know the type of unicorn, the funding which is going around, the private equity of the business, retail, they will give them more time. But I think this is all in the domain of the RBI. So it will be difficult for us to comment. We are waiting as silent spectators. As a disclosure, we have clients who have position in Paytm, and we'll wait for more color before we can react.
The other development which has happened in Paytm overnight is first that the news that they want to sell some part of the business, wallet business, to some other players, that has been denied both from the geofinancial side and of course our sources say from the RBI. Our sources in the RBI have been telling us that any such transaction cannot happen right now. So those are the two things you need to keep in mind. But we have managed to get a slew of opinion coming in on Paytm, how you should be approaching that name and whether it's worthwhile to buy that stock.
Well, yes and no. Definitely, we have as a disclosure both HPCL and IOC in our portfolio. We still think these are excellent plays on the slightly longer term. They've underperformed for such a long time. And now with both the refining margins rising, the results being outperformer, and no impetus from the government, I think they are in a very, very sweet spot. Yes, but you are right. They have run up far in excess in a very, very short period. There will be the provincial profit booking. But longer term, we think energy players in India, like all the OMCs and ONGC, seem to be in a very, very sweet spot.
Talking of energy, one of your old favorites, Sanjeev, Petronet LNG. I want your thoughts on that one. Very interesting news coming in on the ticker right now from agencies that Petronet LNG will renew their long-term contracts with Qatar beyond 2022. Guys, if you could get that flashes back. It's been a mover. It's been a late mover compared to some of the other energy stocks, but it has started moving. And the news is that they will be renewing their arrangement with Qatar beyond 2028. So, an LNG deal could be announced as early as Tuesday. Sanjeev, your thoughts at 275 on Petronet? Does it have more juice?
Well, Ajay, we've been advocating from the peak and the global pricing of LNG prices. But as long as there is constant supply, we are of the opinion that India is fast moving towards more of gas-based business. Petronet will be one of the biggest beneficiary. So we have a long-term target of 350 at 210, 215. We did not imagine it will come so fast, but that is the speed of which PSUs underperformance is now getting corrected. So hold or add on declines or add some here would be the advice.
Okay, fair enough. That's the take coming in. Meantime, let's also get in a take on the charts then of some of the movers in yesterday's trading session. Just checking in then on the broader markets. And here are some of the stocks that came under pressure. UPL, a solid 11%. You also had something like a Dilip Bilcon, which slumped about 6% plus. And Dhanuka Agri as well was another stock that felt the heat. Naresh, have you checked in on the charts?
So one by one, we'll go with two names. One is UPL, which has broken down big time. So the last time the stock made a bottom was around this 530 mark in October, November, and saw a recovery to 610. Post this quarterly numbers, the stock has seen one of the largest volumes in the last 2 years, broken down. And now the next support for the stock is closer to this 400, 420 mark, which was the low in 2020, mid of 2020. So technically looks weak as such, could see more follow-up downside. Then going into Dhanuka, out here the stock was one of the odd ones out of the sector because this was the only stock which actually went up and made new 52-week highs, whereas the whole agrochemical space has been finding it tough. The stock has corrected sharply and now, given the relative strength, the stock should be the best play in the agrochemical space. 900, 950 is a strong support.
That's about the trading ideas, but let's go to Ayesha now, talk about the PSU rally. In fact, yesterday the rally halted. Ayesha, what do you have today?
Well, yes, let's put the spotlight on the kind of rally that we have seen in PSU index so far. So in 2024, on a year-to-date basis, PSU index is up nearly 16.5% versus Nifty 50 index, which has remained absolutely flat. Remember, this comes on the backdrop of a solid 78% of run that we saw in calendar year 2023 and a run of about 14% that we saw in calendar year 2022. Let's also put the spotlight on the top gainers in the Nifty, in the PSU pack. NBCC, for instance, has nearly doubled on a year-to-date basis this year so far, followed by SJVN, which is up nearly 63%. We have Punjab and Sindh Bank, which is up 62%, IRFC, which is up 62%, and NHPC has also seen a solid gain of about 61% in the PSU banking, in the PSU index. Meanwhile, let's also put the spotlight on some other gainers, the likes of HUDCO, RVNL, MMTC. We have RITES and MRPL, which has risen over 50% in this calendar year so far on a year-to-date basis. Let's also put the spotlight on the losers then. We have only two losers in the BSC PSU index, that is BEL, which is down nearly 1.5%, and we also have Mazgaon DOC, which has declined nearly 8% so far in this calendar year. Meanwhile, let's also talk about valuations. Market cap expansion of PSUs we have seen. For instance, current valuation stands at about 58.5 lakh crores versus about 32.2 lakh crores that we saw at the start of 2023. So market cap expansion has really played its way, and massive market cap expansion is what we have seen since the start of last year. Let's also talk about expansion in PSU valuations then. For instance, Cochin Shipyard current valuation stands at 42.4 times versus 7.8 times that we saw in 2021. So massive market cap, or rather valuation expansion and inch up is what we have seen since 2021. Let's also talk about a couple of other stocks then. Bharat Dynamics trades at about 67.4 times price to earnings versus 11.9 times is where it stood in 2021. So yes, clearly market cap has expanded, valuations have also inched higher. And let's talk about a fact then. BSE, PSU, RSI currently stands at about 78.8, which is highest that we have seen since 23rd December 2023. Clearly, PSU stocks have outperformed on a year-to-date basis this year so far.
All right, thanks very much for giving us that heads up. In fact, Sanjeev, just curious as to what your outlook is. We spoke about some of the OMCs, but what about the other stocks that are at life highs within the entire PSU space? The fact that even some of the railway stocks.
So, Avanne, we have three disclosures. NBCC, which I've been bullish since 3 years, didn't perform 35, 40, and suddenly in 2 months, 40 has become 170. Hoodco is another pick. And last but not least, I am still very bullish on IOC and Nalco. Nalco can be a huge outperformer, even can double over a period of time. But right now, like you've seen, there has been huge outperformance. So taking some chips off the block is not a bad idea. But remember, when you do get the correction, then get into these stocks, because I think they are on a multi-year breakout. And they are richly rewarding the patience of the last 3 years underperformance.
Sanjeev, always good to have you in the show. We'll let you go on that note. But let me also welcome on board Hemang Jani and talk about what his market view is. Hemang, hi, morning. Good to speak with you. We were just debating earlier today whether OMCs are now getting priced to perfection, and is there valuation comfort there? What's your take?
Good morning, Ayesha. In fact, this entire PSU rally that we've seen, I think almost now, 6 months or so, it's been quite surprising for a lot of participants. And though we might feel that because of the sheer price move that has happened, are the valuations looking stretched? But if you look at, let's say, for example, OMCs that you talked about, OMCs, HPCL, BPCL, IOC are putting at somewhere around 1.2 price to book. This quarter numbers have been too good, but even if you were to take a slightly more realistic and sustainable kind of numbers, one can look at a decent growth of 18-20% if the crude prices remain stable. So I don't think the valuations are out of whack. Yes, the prices have moved up, so the comfort in terms of putting incremental money maybe a little less, but the whole consensus, if you look at, let's say, for example, a company like GAIL or Petronet, everybody has a sell call, companies delivering, ROE is at 20-22%, then at some point people will want to participate there. So I am little positive. You might see near-term volatility, but I definitely think that some companies are still looking attractive.
Hemang, did you manage to check out some of the numbers which are coming in from the companies such as Fusion Microfinance or Ugro, the SME oriented, or the small finance bank, that universe? Do you like any name out there? Yesterday, Fusion have posted some 25% growth in earnings as well as profitability.
No, Ajay, unfortunately, I haven't looked at some of these smaller, fintech companies. And as we all know, the entire space is buzzing a lot, and we had seen a big movement, whether it is at this point of time because of the uncertainty around the regulatory move and what implications it may have. Not really looking at any specific recos at this point.
No problem. Later in the day, in fact, you can catch that discussion coming in. Fusion would be there on the show. But Ayesha, you had a view on, you were checking out Butterfly Gandhimati, right?
Yeah, and I'm quite shocked, right? Because this was one of those H&I favorite names, if I can call it that. And I'm just looking at the kind of damage that they've had in the third quarter. Their EBITDA has tumbled about 89.5%. Margins have seen a massive squeeze, 1% versus a comparable of 9%. Wonder what went wrong, because this can't be a sudden drop.
So this
right?
is now
It
a
has to be
Crompton Group company.
Gradual one, yeah.
So there are 2-3 things. This entire space of consumer durables are actually going through a very lean patch. Plus, my view is that before the magic of Crompton can start showing in that company, I'm assuming that there would be some amount of kitchen sinking which is happening there.
Quote unquote.
Quote unquote, yeah. Hemang, have you tracked Butterfly Gandhimati or Crompton taking over? See what happened to Escorts, right? When Kubota took over. Complete re-rating. But there were 1 or 2 quarters of kind of lull. So Butterfly and Crompton taking over, any thoughts there? And how numbers will improve from
They
here
had
on?
not looked at the company in detail, but the entire, the brand, particularly in the South India that they have, somewhere because Crompton took over that company, there was a hope and expectation that you will be able to see some, good numbers kicking in. Maybe it takes some time to, bring about an integration. But these numbers, if you look at the top line, it was 238 crore. I mean, significant drop. So very hard to believe. And these are not the things where you can say that because of integration, it is taking time, whatever. But this is not something that is giving comfort. So I would completely stay away at this point.
A lot of other interesting earnings, which have come out. There's, of course, BSE as well, wherein their transaction charges have seen an uptick of a massive 68%. The revenue has seen a growth of about almost 18% on a sequential basis. Then, of course, there's Sundaram Finance as well. Decent numbers there. Disbursement uptick of nearly 17.5%. AUMs as well have shot up nearly 26% on a year-on-year basis. There's IEX as well, which you may want to look out for, besides, of course, the big ones, which is in Ashok Leyland and Bharti. So a lot of numbers there.
In fact, BSE's numbers, very phenomenal numbers.
Of course.
And the reason is that every quarter they are actually launching something new, and sequentially their volumes are going high, especially in the F&O side and Sensex Bank futures. Also, the NSE price in the OTC market, which is the immediate comparable, has actually shot up to closer to 4,000. So, this particular stock appeared stretched to everybody, but the kind of numbers they are coming in and the comparable is going higher. Hemang, thoughts on BSE?
What a spectacular story, Ajay. People had kind of almost written off this company, but I think the way they've bounced back. Also, if you look at their derivative performance, their market share continues to inch up. And more importantly, if you listen to the con call and the details which have emerged, they are developing a co-location facility, which would have a major ramification because, the entire this algorithmic trading and the kind of work which is happening, they will be able to participate. Also, the new MF platform and the data services. So I think this is definitely looking like a big story in the making, and because we don't have too many options when it comes to the capital marketplace, specifically the exchange. I think BSE would be a sole beneficiary of this entire growth and attention which is happening.
To add to the list of earnings, and on the positive side, Idea Forge as well. And, they've turned profitable this quarter versus a loss that they clocked in the same quarter last year. Revenue as well has come in at about almost 91 crore rupees. And we're looking at a comparable figure of just about 8 crore rupees in the corresponding quarter. Linde India, the EBITDA has shot up about almost 9% or so. Insecticides India. So a lot of these mid-cap companies where, yes, Ajay, we are sort of, seeing the amber light that the negative of the earnings are, left behind. But a lot of these mid and small cap companies have posted phenomenal growth as well.
Actually, the truth lies that if you analyze all the numbers come so far, mega caps, or I'll say BSE 100 companies, are slightly softish on the earnings. The broader markets have up till now at least kept pace with the earnings. So it will be interesting the second half, how it actually pans out. There was another company which I wanted to discuss, Sundaram Finance. Out of the NBFC space, the quality NBFC space, Sundaram Finance is up there, and very good asset growth, asset quality under check. Hemang, this is the time for NBFCs, no? If indeed rates tip out by mid of this year and we head lower, it is the NBFC which will benefit most. Which one would you play for?
I do agree that for NBFCs, the current scenario is quite supportive. And, as you see, some of these fintech companies, the wallet companies going through a bit of disruption. Maybe part of that flow can also move to a far more solid NBFCs. And within that, what we like is surely Cholamandalam Finance has been our preferred pick, though it's a little expensive, but from a stability and growth perspective, that's looking good. IIFL Finance again is delivering a very solid sort of numbers consistently, and there is a lot of comfort on the valuation front. So definitely some of these companies we would go with, and we do think that the overall weight of NBFCs in the index will do slightly better because of the incremental flows coming into from the SIP book and general HNI participation. So NBFC the space is something that we would go with. Of course, some of the housing companies like LIC Housing, given the trust in the budget and the kind of incentives which are there. So LIC Housing will be one stock that we prefer at this point of time.
In fact, Ajay, just going back to the rationale on BSE, Ramdev Agarwal, when he joined us on the interim budget day, said that just bet on capital markets. I mean, of course, BSE is one such company, but he said, look at ARCs, look at AMCs, look at mutual funds. The entire pool, he said, is extremely attractive. In fact, let's hear out that soundbite right now.
This is not a very organized, there's no ETF also on this. This is a slightly ignored category. It was always there, we made our career in here, but this includes exchanges. So mother of all the exchanges, NSE is not listed. So exchanges, all kinds of exchanges. Then comes the asset management companies. Then comes the wealth management companies, depositories, a whole lot of other participants. So whosoever is there in the, so basically the beauty of this is that you are getting unprecedented flow of clients. In 75 years, you got 40 million. In next 10 years, you'll get 400 million customers. Every month, we are getting 4 million. So this is unprecedented kind of influx or expansion of the market. So all these companies, they are going to have great time. So one is that. Second is that economy is also doing very well. So that is supported by the corporate earnings growth. That you will see as it pans out, whether I think this quarter is about 17-18%. So if we keep a pace of 17-18% and there is no re-rating, I think markets will keep giving say 15-17%, and that is good enough to keep the crowd excited because the other alternative is just about 5-6% of the fixed income.
But is the crowd of the foreign institutional investors, do we need to keep them excited, or will the domestic
Don't have to bother
investors
about
do
them.
all the
No,
work?
see, first thing is you can't do anything specifically for foreigners. They have a lot of options to go to China or some other place, lose money, gain money. Our retail or our guys, they are going to be stuck in India. So I can predict what Indians will do. I can't predict what.
All right. So that was a take on the entire market infrastructure related stocks, exchanges, what was his first mention out there. Hemang, Bharti Airtel, the way numbers have come out and the buzz for a possible tariff hike by mid of this year is getting louder. Silent mover crossed 1,000, now 1,100 plus. How do you look at Bharti now?
Very steady set of numbers, both in terms of India operations. The margins were slightly weak, but better than consensus. And what is very important, Ajay, to note is that of all the players which are there, let's say if you compare with Jio, of course, Vodafone, it would not be fair to compare. But in terms of operating matrices, Bharti scores ahead vis-a-vis Jio in a meaningful way. Though the subscriber addition is not that good, ARPU, EBITDA margins, they're doing much better. So I think we don't have too many plays, and Bharti will have to be a key allocation, for majority of the investors. And this year itself, the telecom will be one of the best performing sectors in terms of growth and contribution to Nifty. So surely Bharti would be there as one of the core holdings.
Okay. Anything else you have on your own radar and your research, Hemang, which you are studying right now?
So Varun Beverages, Ajay came out with very solid numbers in terms of revenue, volume growth, acquisition, which they are looking to do in Africa. Maybe a little bit of concern on the debt side, but this is like something very clean and very high conviction kind of a story that one can really look at. So definitely we would be looking at some of the pharma companies where the traction is looking good, both in terms of large caps and some of the mid cap companies. The MNC companies are delivering good performance, whether it's Abbott, Glaxo, some of the mid cap pharma companies. So pharma would be one sector where we would have a positive view given the enhanced visibility coming from US and domestic market.
Right. What exactly is your take right now on what to do with Paytm? I mean, is it just a clear avoid? And for those who are, in the stock right now, should they be booking out? Hemang?
So Ayesha, stock has corrected 40%. A lot of uncertainty. So for those who are brave hearts, in fact, unfortunately, this time around, way the circuit filters work, many investors could not even get an exit, which is quite painful. So I would think that it would be good to stay away if you have a small exposure. Anyway, you can just wait for some time, more clarity to emerge. But I'm not buying into this whole thing that maybe a Geo will buy out a Paytm wallet or some other guys. I think those are just speculative stories. We should wait for some more clarity to emerge from the Paytm management on what exactly they are planning to do. That would give far more comfort to investors, but nothing you can do at this point, Ayesha.
Absolutely. Unfortunately, the stock has just been locked in lower circuit from the word go. But there's an interesting development there, and of course there is a lot of talk and debate around why such cases are happening, how the ministries should be looking at dealing with this. And it seems that a group of founders have actually written a letter to the Prime Minister himself, as well as the Finance Minister and the Reserve Bank of India too, to try and urge them to reconsider the recent sanctions against Paytm and engage in a constructive dialogue with the fintech ecosystem. And one such gentleman joins us right now. We have Murugavel Janakiraman, CEO at Bharat Matrimony Group, joining in right now on the show. Murugavel, thanks so much for joining in. Tell us, what exactly is your plea towards the Finance Minister, the RBI, and of course the Prime Minister right now? What is intended in your letter?
Basically, it's an Indian company, one of the first fintech company to evolve from India. It's important player in the ecosystem. I understand that regulator need to take decisions, consider larger interest. The plea is that can this be considered? Can the company give the time to overcome the challenges which they need to work rather than at a complete stop. Basically, we want to support a fellow entrepreneurs, support the Indian ecosystem, and that is what our the broad plea is all about.
Murugavel, I'm surprised. I clearly appreciate and understand. The entire community, the startup community, wants to engage with the government at much more higher level. But these are very specific charges on Paytm. It's not a general kind of observation, right? There are very specific charges of wrongdoing, and as we understand the matter, there was sufficient time given to Paytm as well from the regulator's side to comply with those matters which the government and the regulators are not comfortable with, failing which these steps have come in. So where is the gap? I don't understand.
Yeah, I also don't understand the full information, what's transferred between the regulator and the company. As an entrepreneur, as a person who's concerned about the Indian ecosystem, it's basically to see whether anything can be done to support the larger ecosystem or Indian founders, Indian entrepreneurs. So that's the thing. Again, because if you leave the Paytm out, you are leaving to only two companies, which is Google and PayU, which are all foreign companies. And again, today UPI payment is one of the important part of the Indian ecosystem. Also, that there's a regulatory the benchmark that company cannot have more than 30% in the UPI thing. But if you take the Paytm out, it's literally then controlled by only the large company. So that's also our other concern from our side, actually.
Mr. Murugavel, you haven't got a response yet, have you?
I'm sorry?
Have you got a response to your letter from any of the government counterparts?
No, we just supported the company. So we sent a letter.
You support the company. No, when you say support that, have you worked with the company? What are those specific charges which they should not have done or complied with the time? Because it appears to be a very general kind of a letter. And if we observe the way the current establishment has been working over the last few years, be it Niti Aayog, Startup India, they do work very closely with the Indian tech ecosystem, don't they?
Well, absolutely. Today, the government establishments, all these, the entity, they definitely support Indian entrepreneurs, Indian ecosystem. Definitely, we very much appreciate that.
Well, I understand this appears to be more of a, just standing by with your, peers and friends in the industry. But as you just said that you've still not gone into greater detail of the issue, the specific charges and what are the contention of the regulator that they have been, they're kind of forced to take such a step against Paytm.
Yeah, absolutely. Because you don't
Fair
know,
point. I take your point.
Specific issue. It's more of supporting the ecosystem, supporting entrepreneurs.
The ecosystem,
even
rather.
anything can be done to support entrepreneurs as well, and also it's good for India as well because, as I said, UP is one of the important part of our overall ecosystem, and if we take the Paytm out, it's leaving only the Google and the PayU, so it's a foreign companies. So whether that's
bustling tech ecosystem and startup ecosystem that we have in India, second highest number of unicorns after China. So clearly nobody's questioned that. Thank you very much for your time, Murugavel, on that take on the letter which they have kind of written to the government. But in the meanwhile, we also spoke to Finance Minister on this issue and wanted to take a stance from the government side. How are they reading this matter? Let's hear it out.
The regulator is taking an action. I normally don't comment on any one particular company or any particular investigation which is going on. India's contribution through the fintech is a big thing. We value it. We value fintech sector as a whole. If there are regulatory issues on which a regulator takes action, it's for that company and the regulator. I may not be able to speak on it at all. Just as I may not be able to speak on any one particular investigation which the ED does. They go on the merit of the issue. This is about the banking side of Paytm, on which the regulator RBI is also coming in with public interest in mind. It's not the intention of RBI to, put common citizens who got used to digital payments to difficulty. RBI is only ensuring that the right course corrections happen so that people are not affected. So I really cannot comment on that case, but regulators normally come in with public interest in mind.
All right, there you have it. That's the latest with respect to Paytm and the ongoing saga. But let's find out those mid-cap trading strategies. What is it that our chartists are betting on? Kunal, what's looking good?
So I'll go for Biocon. That's a stock which yesterday showed some bit of activity back again. It's almost like a V-shaped recovery for Biocon, coming back about 280 levels. So it's suggest a buy with a target of 300, stop loss at 272.
Okay, watch out for Biocon. 300 is the target price. Naresh, let's get in your mid-cap trade.
So a pharma name again here. Buy on Granules India. The stock is now testing the highs made in 2021, which was closer to 435, 440 levels. In the short term has given a flag breakout. And if you look at the last 1.5 years, there was a lot of resistance around 400. So that has been taken out. So clearly structural breakout in the making for Granules India. So expect this to make a breakout move going forward in the next few sessions. Stop loss at 417, target price of 500.
Okay, just want to quickly see what Bharti is up to right now in trade to acquire Paytm's wallet business. And then, of course, I want to check in on what Paytm 2 is up to and whether there's any resurrection in the stock or not. Jio Financials, by the way, already down 1%. Once again, locked down nearly 10% on Paytm. Consecutively, you've seen down circuits on Paytm. But Vinny is here to tell us what's the khabar and the buzz on D Street. Vinny, what's the stock chatter?
Today we're going to be talking about delivery on the cover front and what we are understanding. And yesterday, let's not forget, the stocks saw a bit of a fall coming in as well, was down more than 3% in a trade. But what we saw was volumes. There were abnormal volumes in the last couple of days for delivery. Now, sources are saying that seems like, we will be seeing domestic funds that may invest nearly up to 200 crores via block deals here in delivery. Also, post-budget buying has started, especially in the HNI accounts for delivery as well. So that's one to watch out for. And currently, when you're looking at it, the shares of delivery are trading above the 200 as well as the 50-day DMA levels as well. So just keep an eye out on delivery. Seems like there's going to be strong recoveries expected to be seen in delivery as well, given that there was abnormal volumes there as well. And in terms of what sources are saying, that domestic funds could be furthermore increasing and buying in delivery. So we're keeping an eye out on that one.
All right. Thanks very much, Vinny, for giving us that heads up. Let's get a move on. Lots of other news to track across the globe. And King Charles of the UK has been diagnosed with a form of cancer and will now have to postpone public engagements to undergo treatment. He became king in September of 2022 following the death of Mother Queen Elizabeth. He has begun a series of treatments and is looking forward to returning to his full-time duties as soon as possible. Meantime, the social media giant Snap has decided to lay off over 500 employees, which constitutes 10% of their workforce in a fresh round of job cuts. The Snapchat parent expects to incur pre-tax charges mainly comprising severance and associated expenses as well as other charges with an estimated range of $55 to $75 million.
And back home, following the Bombay High Court order to launch a website and mobile app for complaints on air pollution, the BMC has launched the Android application called Mumbai Air as of yesterday, on Monday that is. Meanwhile, an app for iOS phones also is going to be launched later. And thin fog continues, or rather thick fog actually, continues to engulf Delhi and its neighbouring areas on Tuesday morning as well. According to the IMD, the cold wave conditions in northwest India may actually intensify as the minimum temperature is expected to see a drop between 2 to 4 degrees Celsius till February 8th. Meanwhile, Himachal continues to battle with continuous snowfall and rainfall impacting the daily lives of residents.
All right, let's find out then what the outlook is in terms of the index calls. Here's what it is that our chartists are advising. By the way, the pre-open rates had about 21,800 thereabouts. It's no trade, says Kunal, on the Nifty index this morning. A hold call from Nuresh. On the Nifty Bank Index, consolidation mode continues, and that's the same advice that Kunal is giving, no trade, while Nuresh continues his stance of hold on the Nifty Bank.
All right, so Kunal is taking a stance of no trade zone, okay, and Nuresh has a long call there. Look at the Reliance Industries. That one is one of the biggest contributors that we are standing at 21,800 right now. Nuresh, RIL is making move in spurts. First, it crossed the 2,600 zone, went to 2,900 closer, came back at 28 now. Is it on the cusp of breaking beyond the 3,000 mark now?
So if you add the geofinance to it, it has already crossed that. But overall, yes, it is setting up for a trending move. If you look at it, 2650 was the previous high, which was a problem zone right from 2022. Crossed above that, made a retest, and now this move. So overall, it's a structural trend. Maybe we could take a pause here at 2,800 to 3,000 for some time and then again trend up. But for now, it's a stock which is trending up, and it is one of the only stocks in the large heavyweight category which is really trending. So expecting this to continue, it's a buy on dips to 2,800, 2,850.
Right. Okay. I just want to see what Bharti as well is up to, what Ashok Leyland is up to. All these, of course, are going to be earnings reactions as well. Bharti starts off about 1% higher in trade right now. Ashok Leyland is the one which is seeing a material move, about a 4.5% move coming in there. Shree Cement, by the way, let's see what that stock is up to, because they've said that there is no demand of tax deposition in January tax notice. They made that clarification to the probe that was doing the rounds. There's also IEX, there's Sundaram Finance, which has come out with its numbers. There's Bajaj Consumer as well, which has come out with a decent set of numbers. BSE, of course, has been a big dhamaka earning that we've been, highlighting. So let's see what that stock is up to. Not a material move, but these are just the pre-open rates. We'll wait for the market to open. Perhaps you will see a bigger move come by. There's also Triveni Turbine, decent set of numbers there as well. About a 32% uptick coming in on the revenue. The EBITDA has jumped up about 31.5%. And then, of course, on the weak side, Tata Chemicals, Suven Pharma, Fusion Microfinance as well, a bit of a mixed bag because the asset quality has sure deteriorated. And then Butterfly Gandhimati, wherein the damage has been quite deep in terms of the earnings hit. So all these stocks in focus. 1.5% of equity block deal on Paytm.
And apart from that, HDFC Bank clarification has actually come
Yes.
in. There are 6 banks where they have sought not to raise their stakes. Suryoday Finance, Yes Bank, IndusInd Bank and few others. So it's not just IndusInd Bank where and group wants to. So clearly,
your screen, and I see a whole lot of red and a very tempered Nifty right now, just about marginally in the green. But I would still say, given the global handover and the mood across the globe, we are still the world outperformers. Although I think I spoke too soon because it's completely flattened out and perhaps we're going to drift into the red as well. ICICI Bank, Kotak Mahindra Bank, all these stocks are in the red as we speak right now. ICICI Bank, in fact, is down a good 0.5% as we speak. Let's see what Bharti is up to, Ashok Leyland. All these earnings reactions should come off you on your screens next. What Reliance Industries is up to, what Jio Financials is up to, because these are the bigger newsmakers. Bharti has gapped up about 2.6% right now. So pretty much on its course to reverse yesterday's move. I think the bigger damage is coming for Jio Finance. The kind of exuberance that you saw with all the buzz doing the rounds that they may be looking to acquire Paytm wallets. It's a 4.5% downtick that you're seeing on Jio Financials now that the clarification has come in that they're not in talks as of now to buy Paytm wallets. Paytm though, 7.5% lower. The weakness on that stock clearly continues. BSE, what is that up to? Bajaj Consumer, Sundaram Finance, these have been some of the earnings which have come by. Adani Total as well, they've signed an agreement with one of the companies for an LNG ecosystem in India. So that also is going to be another stock which is going to be in focus. Weak numbers from Tata Chem, Fusion Microfinance, Faridi, Butterfly Gandhimati, all these are earnings reactions, as would be the case with an Idea Forge, with the Linde India, Insecticides India. All these stocks have come out with their numbers. So, yeah, that's pretty much what the market is right now.
The point to watch out for also, Ayesha, is that the down circle